Hello, it's Morag. This is 3 Minutes with Morag, where I try to simplify and demystify accounting terms and procedures. Today I want to talk about the difference between charity and business accounts. Okay, so as I said, my name's Morag and I run Northwest Numbers Limited, and we provide bookkeeping and accountancy services for small charities, not-for-profit, startups and businesses. So if you've never looked at a set of charity accounts, you will notice that they are quite different. If we're talking specifically about purely charity, purely business account, they can be very different. They're actually they're regulated by different legislation. Business accounts, they're usually they're mostly regulated by Companies Act. Obviously, if you're a social enterprise, etc., you have your own, but a lot of organisations are under Companies Act. But the charities have their own act, actually called the Charities Act, which dictates quite a lot about how they deal with their finances, how they record, etc. So, right away, when you look at a set of accounts, you will notice that they don't have what most people would expect, like an income statement, a profit and loss account. It's called a SORP, a Statement of Financial Activities. What they also don't have, just plain turnover, because they're usually not actually selling products. Or quite often not selling products. Their main income's not from products. Their income comes from grants, legacies, donations, etc. And they're also split down. Sorry, it's just showing a low battery. They're also split down between restricted and unrestricted, because a lot of the funds that obviously the difference between charities and businesses as well, just one moment, is that a business gets money to provide something, whereas a charity, I guess some people would argue a charity's being given money for nothing. They're not being given money for nothing. They're being given it. They are also being given it for a service, but it's for like a good deed. So what they have to do is they not only have to think about income as restricted, unrestricted, or endowment, but they also have to think about which funder has actually given them that money, and what's the expenditure, what are they actually expending it on. Okay, so what that means is it has to put it in kind of like into separate pots, and then the expenditure goes into the same pots so that you can say, right, this is the income you gave me and this is the money that I've spent out it. Okay, so that's right away, that's a big difference. Sorry, I'm just looking at my notes. Obviously, if you've never done actual charity accounts before, this is where the kind of like specialist understanding and knowledge is required. So, regulation of charities. As I've mentioned, there's the SORP and the Companies Act and the Charities Act, but also things like even things like VAT are different, because charities, I don't think ever would be able to recover all of their VAT, but they can actually recover some of it. So they have to kind of work out how much of that, because obviously a grant, well, no, I can't even really say that globally. Well, yeah, usually a grant is not vatable, but if you have like a service contract, it might be vatable, but it might have a different level of VAT because of its function or the reason that you're being given it. So every time you kind of like take out a new type of income, it's always worth making sure that you understand the VAT elements of that, okay? So, okay, I've already mentioned about the fact that the income and expenditure is called a statement of, sorry, I've got slightly out of, what's the word I'm looking for? I've got out of sync with what I was actually saying. I'm running ahead because of the knowledge that I know. I'm running to bits that are further on in my notes. Okay, if we're talking about it, so I mean that's the large thing on the, mainly the thing on the income. It's a lot more complicated than just normal business income. Even on the expenditure side though, there's two main categories of expenditure. It's expenditure that you've spent to raise funds, and then there's the charitable, the expenditure that you've spent doing the charitable activity that the charity's set up for. Over and above that, if they don't fall into either of those categories, there's what we call support costs. So if you want to equate that to something the equivalent of a business, it's basically your overheads, because the other two types are direct costs, because you know that you've spent that to be able to go out and raise money. So that, I mean, on the smallest scale, it might be like raffle tickets because you're going to run a raffle to get money. That's fundraising costs. Charitable activity might be a daycare centre. You've had to rent a building to hold the centre in. That's your charitable activity, is the daycare centre. But obviously, because you're running the daycare centre and helping people, you've had to rent premises, but it's directly because you're doing that charitable activity. Hopefully that's quite understandable. So, as I said, everything else that's kind of left over are what are called support costs. And quite often what happens with support costs, it kind of depends on what the restricted funds agreement says. If they're giving you a certain proportion for running costs, then you can apportion part of those support costs against your income. If it's basically they're very specific and you're only allowed to do the direct costs, or you're only allowed to do equipment specifically for that activity or whatever, then you can't apportion any support costs against it. One of the things that might happen is you might have a manager's salary as part of the funds that you requested. But when you were requesting the funds, you would have said, okay, I have this full-time manager, but I'm only going to use them a third of the time on this charitable activity. So can you give me money for a third of the salary? So you would apportion a third of that manager's salary there. I hope that makes sense. And it would be that would be the charitable activity cost. Okay, so let's see, what else have I said here? I think the point is that if you're picking up a set of charitable accounts for the first time, even if you understand company accounts, you will not automatically understand charity accounts. They have a different jargon, they have a different way of being set out. A lot of the information is also derived from when you're doing the financial statements. There's a lot of information that you basically get from reading the written words in the review, because just looking at the accounts won't tell you necessarily what charitable activities they're running, etc. That would have to be in the annual review. So it's quite important to read the whole thing together to get a full picture of charity accounts. I hope that's given you a little bit of an insight into charity accounts if you've never looked before. Or if you intend looking or have started looking, then at least it will give you a little bit of a start on some of the jargon and what's different about it. Okay, you take... Oh, my name is Morag Hunt. I run Northwest Numbers Limited. If you need to get in touch with me, please do. My email is accounts@northwestnumbersltd.co.uk. I have a Facebook, LinkedIn, Twitter and Instagram. My Facebook is my main, and I also do have a website which is still under construct. Well, it's still being improved. So as well as these 3 minutes with Morag, which I put out Tuesdays, Wednesdays and Thursdays at 1 o'clock, I also offer a free initial consultation. So if you do want to book one of those, please do get in touch with me by email and we can sort that. Okay, I hope that's been helpful and I will talk to you tomorrow. Take care.